Alright guys, so we got a really interesting mover here, pre-market, ticker MCUR. That's Macrocure Ltd, but the important thing is that this thing is up over 100% pre-market. It's got a ton of volume. The market is about to open. It is 6:29 in the morning, and we have news on this. There is an acquisition that is going to happen potentially. So definitely going to be looking at this morning for a potential play. So far it's having some resistance right around the $3 area, $2.96 to $3. But the indicators are looking pretty good. Based on the pre-market, I'm not going to take a position right off the gates, but I might get in on one if there's enough momentum. The market just opened, and I'm going to definitely consider an entry right here. Let's see how this goes down. It's at $3 and moving. Very nice first candle there. Pushing up, looking like a good place to enter. We're going to find out in a second.
Now, drug maker Mylan responds
bids
to complaints over the pricing of
not stacking just yet. Oh, here we go. Some bids coming in on the level 2. Bids are starting to stack. Starting to look better and better and better. Timing sales is looking a bit better as well.
And oil resumes its drop near $47
let's see.
a barrel.
We want to see it get over this $2.95 to $3 area. And we want the indicators to look a little more bullish before we go in. There's a lot of volume on this first candle.
Alex.
All right, Caroline, we're looking at markets.
Here we go.
Okay,
Right so I'm going to take a position right now on this.
9:30. We're moments away here. We're waiting for markets to really start opening today, but did want to take a look at the CACs and the DAX. They are off by about 0.5% over in Europe. Volume is very light. Remember, London Stock Exchange is closed.
So far, not really at a gain.
Of the session, kind of reverberating from a potential Fed rate hike that Janet Yellen set for us on Friday. Markets are slowly opening. We're looking at a slightly higher.
And it looks like it is actually kind of falling off.
Again, light. It's all going to be about Jobs Friday and pushing ahead into that. This is the intraday S&P futures, the E-minis coming out here. I just wanted to highlight what happened around 8:30, which is when we had personal spending and personal income data coming in bang in line with estimates for July.
See if it comes back around. We kind of got faked out right there.
If people are making more, they'll spend more. That was the key for GDP. So that data also helping to boost markets. In individual names, one name we're following very closely is Mylan. That company coming out and saying that it's going to sell
pretty ugly candle.
Generic EpiPen, about $300 per 2-pack.
And the entry wasn't so ideal there.
$57 in 2007. That price would be a 50% discount from what it was.
Definitely not an ideal entry. At quite a bit of a loss here now.
From the government, from Congress, as well as Hillary Clinton for its drug pricing. Also taking a look at Amazon and Pandora, a fascinating story evolving. The Financial Times reporting Amazon may actually start its own music service. It will match Pandora's $9.99 a month in negotiations with major record labels.
Might sell this in a second for a loss, unfortunately. I'm going to give it a sec to come back around, though.
Stock's not moving a ton today, but a story of how many businesses can Amazon really get into that is moving Amazon stock going forward. And Caroline, you're
bids
looking
are
at
still
a
pretty
huge
low.
story to pay
Ask
attention
is
to today
not any
as the
better.
markets open.
It's not the worst candle right here, though, off that initial dip.
It's my favorite. It gives you the sectoral breakdown, and you've got to be keeping on the ramifications of what happened in the United States and what happens when it comes to Europe.
Come on.
We're seeing the stocks
Give me a good candle here. Let's get back up. Let's get back up. Here we go.
Every single industry
Better candle.
falling. One ray of green. Healthcare.
We're coming back up to about 277.
Tends to outperform in times of risk aversion.
And there we go. Another green candle coming up.
As we see energy drift lower, oil taking a hit, as you were telling us earlier, materials lower, consumer discretionary off by 0.6%. Dig into
not good enough, though.
Get your sectoral breakdown. And I really do think this shows that whatever comes out of the Federal Reserve.
We had a nice green candle there, but now we have another red one.
Globally, they are dictated not only by
not
the
liking
US
this
dollar,
movement so much.
only by consumer spending, but what happens worldwide. And this is what's sending Europe lower, Alex.
Well, I'm looking at my favorite chart, which I feel like will be my favorite chart for the next 4 weeks.
I'm not giving up on this thing just yet, though.
32-year yield spread. Yes, we know that it is around the flattest curve since 2007. You had Friday was a different story. You had
almost a green candle here.
Across the curve, a big jump in 2-year yields.
You see it's starting to close more close to the top
since May. But today, it's the buy the dip mentality.
And there we go.
You have the sell-off. Now you have money coming back into the market, and you're seeing the 10-year yield in particular rallying the most in the week, and that is causing the curve with 30s and 2s to continue to flatten over here. The idea, Caroline, that
you know what? I'm not liking this movement still.
If you go below 1, I mean,
I'm actually going to sell.
What kind of economy does that say if the curve continues to flatten? If you keep having
so I actually just sold for a loss.
Does the Fed
got out of that.
control over the longer end of the curve?
I don't like the movement on it.
These questions really percolate.
But I'll consider an entry again.
Yeah, and fascinating when we were speaking to Scott Mather of PIMCO earlier, really just looking at.
So I just actually took a loss on those shares.
Coming out today, you saying
unfortunately,
it bang in line with where expectations were, but he feels
it's not over
inflation
just yet.
will eventually overshoot. He's getting out
Ooh, it is
of
coming
those
back
shorter
around.
duration
Possibly.
treasuries. As we're
Let's see
seeing,
here.
that sell-off in the 2-year was big on Friday, but he really does like the inflation-linked bonds overall.
Right, and longer term, we're looking at a 4 basis point decline for the 30-year yield. So go figure.
Still not
All right,
not
for
too
more
great.
on market expectations after Fed Chair Janet Yellen's Jackson Hole remarks, plus all ahead of Friday's jobs numbers, is Mike Regan of Bloomberg Gadfly joining us now. It's all going to be about
And
the dollar.
boom,
It's going to
coming
be
back
about the
down.
short end
So
of the
far,
curve.
selling there was a good idea.
Absolutely.
We would have been at a much
And
greater
big,
loss now based on those
increase
last
in the
candles.
Bloomberg dollar
So we
index
mitigated our
last
loss, which is some
week,
good
up
risk
about
management.
1.2%,
Unfortunately,
which is the most
this
it's
thing
gained
kind of takes
since
us out
about
on this
May.
candle here.
So I
We had
think,
good volume.
again, all
We started
sort
to
of returns
close
to the
up
dollar
nicely
haven't
above
been
the
for much of the year,
resistance
which
area.
very well could have been
Indicators were starting to
part
look
of
pretty
the
good.
underpinning,
So
behind
we
the equity
took
rally
a
we've seen.
potential breakout
But,
/ momentum
otherwise,
play there,
interesting
but
to me that we finally
then we had a
did
pretty
see some
ugly red candle,
volatility
tried to
in
come
the
back.
market yesterday.
We
S&P
sold
500
where it was coming back
moved at
around,
about a 27
but then
point swing
it
from
ended
its
up
high to its
dipping
low
even
of the
more.
day,
So
which is the most we've seen it move since
not the best
early
movement.
July. But yet the range
let's
still
see.
holds. We've
What I'm
been
going to do
stuck in
is
this
put an
trading
alert
range
down
from
here.
a little bit below 2150 in the S&P
I already have my
500
alert at
to a little
294.
bit below 2200. And really,
So this
even
is the
that
candle where we
volatility
got
on
in,
Friday didn't
started
test
breaking
the
out.
lower end of the range.
Indicators
So I think we
looking
could be in
decent.
store, not for
RSI
I
wasn't
hate to be the one
perfect
to
though.
jinx it, but we could be in store for
When
another
we
sort
were
of quiet
overbought,
week.
that's when we have a better
It's
chance to
again
run,
that
which was
the
over
news
here.
is
Of course, that
backloaded
was
on the week
pre-market
with
though.
Friday.
I didn't
Everyone
feel like
waiting
buying
for
pre-market on
Friday for
this.
the jobs report
And
to
then
see,
over here
what that means for the
is,
possibility of a September rate
let's see,
hike.
I think this is the
But
candle
in
where we
financials,
sold right
though,
here.
we could get some kind of movement. We're seeing the REITs broken
we got out with a,
financial,
you know,
into financials.
little
What
bit
does
of a
that wind up
loss,
meaning for the
but,
sector in the S&P?
For these early morning runners, I don't take a big position anyway, since I'm skeptical of the potential that they have because of that. You know, it's always a bit risky to play a momentum play like that, especially when the news is so iffy. Like, it's a merger, but we don't know too much about it. We don't know the acquisition price, and we're kind of waiting on more news to come out on this. So I'm going to be watching this the rest of the day for sure, but for now,
so what's going to happen is they'll be broken out.
we'll see. For now, I'm out of it. I'm going to consider another entry, and I'm happy with where I sold. It wasn't nearly as bad as selling where it's at now, so definitely mitigated that loss from being heavy, which is important. And we'll see if it comes back around at all.
A very interesting time because REITs have, a lot of people expected this change to draw some more money into REITs, get people more interested in them. But the change is occurring at a time when obviously everyone's eyes are on interest rates. REITs are very sensitive to interest rates because, companies that borrow to buy real estate, obviously the lower mortgage rates are good for them. And also the dividend yields are very attractive compared to low treasury yields. So it's kind of the opposite phenomenon of the rest of the financial index.
And we have some green candles
banks,
coming.
Insurance companies, they're very correlated to higher yields. So we've seen the S&P Financial Index actually reach its highest level of the year on Friday, despite some weakness in REITs. So it's really breaking up. It's a breakup of the financial sector that makes a lot of sense from that perspective, because they really do go in opposite directions with the prospects.
Well,
for
you can
interest
see
rates.
it's trying to come back around once
definitely
again.
Sort of
Still
a potential
struggling though.
market moving event in this low volatile.
We almost
low
actually have a
volume
bearish
week as we
cross
head
on
to
the
Jobs
averages.
Friday.
That green
Mike
average
Regan,
of 20,
thank you very
almost
much,
crossing
Bloomberg
over the
Gadfly
10.
columnist.
The
And
RSI
Caroline,
is coming
overall,
back
it's like
around
the
though, which I like to
idea.
see.
Low
However, we just had that bearish
volatility,
cross,
low
20
volumes.
average
Wait
above
for it
the
for Friday.
blue average.
Yeah,
10
and currently
average.
volumes down by some
And
60%.
this candle's
Is it here in
super
Europe
ugly right
because,
here.
Well, UK busy having a holiday, Alex. But I wanted to
Don't like that
focus
one
in now
at
a little bit on
all.
the hedge fund area because Carlyle
And I think
Group
we
is
might
the
see this
latest
trend down to
company
support
weigh
around 227
withdrawing
at this
from its
rate.
hedge fund activities. Now, that's been according to the Financial Times. This after hedge funds saw record outflows in July. Very pleased to say Fabio Savoldelli, Columbia Graduate School of Business adjunct professor, is joining us now with a really interesting take on this hedge fund outflow. And it seems to be the passive side that's mainly getting out.
I would think so. I mean, first of all, the laws of gravity have not been repealed, even in the case of hedge funds. If you look at the Carlyle Group, the fund that they're looking at exiting had gated and stopped. Claren Road had gated and effectively
what is this thing
stopped
gonna
redemptions. And then they get a sell recommendation from Cliffwater. That's pretty much the kiss of death in this industry. And to see it unwinding is not a massive surprise. But I think overall what you've seen is an interesting statistic which Bloomberg
Right, it's coming back around now a little bit.
24% of investors.
Still not bullish enough for my taste. It probably will have to get back to that resistance at about 295 for these indicators to start looking more bullish.
Planning to reinvest, and the question is,
not really too keen on an entry here.
Actually leaving the sector, where are they going? You know, certainly bonds are not incredibly attractive, and equities.
And you can see this candle is just closing lower and lower.
Some people pause.
Pretty disappointing open so far for this stock. Really struggled since 6:30.
To be the change in the role of
6:30
what a hedge fund investor does.
Right here,
who
you see it's only been trending down since then.
Is, and also quite importantly, what the hedge fund investors, to be successful, must do. The role of the manager, which used to be just set it and forget it, buy the legends and
open
forget about
price
it
of that
from there,
candle
has absolutely
and that candle.
changed. Now
So
the hedge
let's
fund
see.
managers must have
Ideally,
an
we'll see it
active
push to about
management
278.
view. What strategies are going to be doing better looking
Before we can test that 294 area.
You know, are going to be.
So I'm going to remove this trend line now.
And when we look at the kinds of things that they're going to need,
I have that alert set at 278, so we'll watch that.
Scott Mather today. You know, he talked
I'm not really
about
seeing too much else moving this morning.
And inflation. Well, do you have a view on that? If you take his view that inflation will overshoot, do you have the
take a look at the scanner that we have going.
Funds that can protect in a rising rate environment, particularly
you also
as
have
Alex pointed out, with the curve as as shallow as it is, and you don't have to get in there and have a view on what Mylan's earnings are going to be like.
And why isn't this thing loading? Come on,
hedge fund manager,
there we go.
Again, just looking
Here's
at the things that you and Alex discussed this morning. Rate expectations, 5 years
moving
out,
up, but not
inflation
really
expectations
enough.
5 years out. If you're a
Check out CTIC again.
manager, if you're a manager investing in hedge funds, you got to have a view.
And do you think that
CTIC,
the money coming
is
out of hedge funds is being distinct as to
definitely
which
not something
hedge
I would
fund
be
manager
trading.
they're with?
No
Are
volume
people
at all
being
in that.
discerning as to which is
There we go.
underperforming?
The chart was
or is
just
this
a little messy.
generic pull out
Still not
of the
really
system?
my kind of stock.
Yep. Well, sadly, what I
GNW
think we've been
also
seeing,
coming in.
and obviously you get punished for poor performance.
And it looks like I already have an alert on GNW.
Of it seems to
And
be
might as well, rather, it looks like I already have a resistance level on GNW. Must have happened sometime in the past.
That might be
Let's
well
see.
positioned for example, rising
Not sure when
rates
that
in the
happened.
future.
So it looks like it's actually trying to break out this channel now.
Seeing tremendous redemptions because those rising rates haven't happened. I think I read somewhere that past performance is no guarantee of future results. And it's different
That old
when
chestnut.
you see it's a catchy buzz phrase that's really catching on Wall Street, but seemingly not to some of the hedge fund investors that are to some degree just dumping the poor.
Go to the daily chart and check
lower
that out.
Previous performers, even if they've been people brave enough
Oh,
to
wow.
tilt against some of the
Things have been
current,
trending up very
the
nicely
current,
on daily.
powerful but unsustainable trends.
It looks like
There's
it
also an
looks like
argument
it's
to be made
breaking
that
out
hedge
of some
funds just got
resistance right
too
now.
big, and that's in part why you're seeing redemptions kind of outmatch any kind of creations of
I'm
hedge
gonna post this one in
funds
chat.
this year
It's definitely looking
potentially
interesting
because
enough.
they're just too big, and you can't wind up beating the S&P. You can't have a stellar outperformance when you're all in for the same pie. What's the argument you made for that?
Historical resistance that's
there's
breaking.
two of them on that. First of all, actually, the headline makes for a great headline about all the money flowing out of hedge funds, but we're talking a movement from something on the order of 3.6
Might try it with a small
trillion
position.
to
It doesn't look like it would
3.1
yield too
trillion.
much.
It's trillion. It's not
potential
billion.
results,
It's not
though.
a redemption
Potential
of a few
profit.
$100 billion.
Exactly, and believe me, the long-only world would be thrilled for such a small percentage. As a percentage, it's decimal 0.009. So you're talking really a rounding error for an industry that was $2 trillion. When I started, it was $2 trillion. What, 4 years ago, 3 years ago? When I started in it, we were thrilled when it crossed $1 trillion. And now, I'm not 108 years old. So you've seen 1 quarter of redemptions following a previous quarter of redemption, in 09. But also, one of the issues which is worth looking at is the reality of how much harder it is, as you say, partially because of the size. Look at the top performing
GNW doesn't look too bad.
Returns.
We just got an alert on MCUR though.
To the largest,
Let's go back to that.
performing strategies. You would have outperformed the S&P prior
MCUR
to 2007
touching that alert that we
by
had
over 20%.
at, what was it, 278, I believe?
If you look at it in the more recent time period since
Let's
the
see
crash,
if it starts coming back around yet.
even if
It's
you
actually
did the
holding
top
support
performing
fairly
hedge fund
well
strategy,
in this
you still
mid-channel range.
underperformed by 4 or 5%. And that kind of number is a difficult road. Unless you're actively moving your portfolio, you've got to move it to catch up and be able to continue to compete. If your index is going to be, if when you sit down with the board and they're talking about the S&P, you've got to move and actively invest your portfolio.
Fabio, thanks for your perspective. Fabio Savidelli of Columbia's Graduate School of Business and Bloomberg contributing editor. Great to get that perspective on Carlyle and hedge funds. Well, coming up, we're going to round up reaction to Fed Chair Janet Yellen's Jackson Hole speech. Look ahead to the Friday's jobs report. This is Bloomberg.
thing is, oh wow, GNW is going up nicely still, even now. MCUR, wasting our time. Don't want to be looking at that anymore right now. I do like GNW. I'm going to take a little position on that. Let's take a look at our friend GDX. Good old GDX. GDX coming up nicely. Might be a nugget day here. Look at that, it dipped below pivot point. It's coming back up around now. Nugget, let's take a look at that. And respectively, Nugget is coming up nicely as well. Wow, very nice from that dip. Might consider some Nugget. Let's go back to MCUR. And yeah, not too much going on right now. So I'm actually going to end the video for now, and I will update this if anything else interesting comes around. Right now, I am actually in a position on GNW though. I ended up getting in there at 483, and I will have a sell area in mind right under that 479 support. If that breaks, I'll sell. Very minor loss. This is a very low risk play, so I like that a lot. And yeah, that's really all I'm in right now. Everything else, not great. MCUR had a very nasty red candle there. It is trying to come back around, but for now, it's not really looking good. And GDX, I will definitely consider a nugget play, but for now, just in some GNW, and we'll see what the rest of the day brings. I hope you guys enjoyed this little video. It's too bad MCUR didn't go better for us off the open, but you know, can't win them all as long as you win most of them or mitigate your losses and succeed on your win even more so. For example, if I had a 5% loss in MCUR and made back 15% on GNW, not saying I will, but if that happened, well, then it wouldn't really matter that I had that loss. I mitigated it and I made much more than I lost today, so we'll see how everything plays out. Whoa, what's going on with the recorder there? There we go. Looks like GNW actually went pretty well for us, so I actually just took my profits off the table. Just wanted to update that. Sold at 495, was in at about 483 as you guys recall there when we were looking at it earlier in the morning, so that definitely went off nicely. Another thing that we're watching is still MCUR, but so far that's just been trending down. Holding support well, but you know, we'll see. We'll see if it comes back around. For now, I'm about break even for the day. I took a loss on MCUR. I made that back and then some on GNW, but I'm still only right around break even, slightly more than break even, so I'd like to get another plane today, but I'm not going to rush into anything if the setup's not great. So we'll see how the day goes down, and I will update this video if anything else moves, if we get in on anything else, and if not, it'll be uploaded just like this. So once again, I think I already said goodbye earlier in the video, but I'm going to repeat myself now that I'm adding this little excerpt on. That's about it for now. See you guys next time. Take care.
Well, I don't know.